Owning a small business is the best way to pay $0 in taxes and also keep more of your hard-earned money. Even if it's a simple $10,000 side hustle or a $1 million business, here's why. So as an employee making $100,000 per year, you're going to be paying about $14,322 in federal income tax. If you purchase a car worth $50,000, you'd be paying $900 a month as your car payment. And unfortunately, we can deduct this as a cost. You still have to pay your mortgage, phone bills, utilities, etc., and that comes up to $48,000 for the year. So our total net income after paying for taxes, car payments, bills, etc., comes out to $26,878. Now let's take a look at a small business owner. So we have $100,000 in income, but unlike a W-2 earner, you can use deductions like your home office deduction, phone bills, travel, meals, etc. to reduce our income even more. But we're not done. We're going to use section 179 plus bonus depreciation to write off your vehicle that weighs over 6,000 pounds. We purchased it with $0 down, but we're still able to take a massive write-off of $40,000, bringing our taxable income down to $23,000. Now last but not least, we're going to be paying our kids $11,500 a year each. They don't have to pay any income taxes on that because it's below $12,000, and we get to use it as a write-off for our business. So after all these deductions and tax savings, the small business owner ends up paying $0 in taxes, keeps more money, and also gets to help out their family along the way.
Great. Well, TikTok is always where I go for tax advice because definitely there's nothing wrong with what he's saying here at all, unless you stop and consider that you can't just write off a car because you had your business buy it. It has to actually have a business use, and you have to be using it 100% for the business. And if you do that, by the way, when you have your business buy your vehicle instead of you personally, your insurance rates can be up to triple what they were for you personally because your business has a different perceived use and a different risk profile than you driving a personal car for personal reasons. So yes, if you meet all the criteria, you can write the car off as a business expense and take that deduction, but then you have to only be using the car for business and you have to pay 2 or 3 times more in insurance than if you bought the car personally. So there are other ways to do it. You can own the car personally, track your miles that are business miles and deduct that. Yes, you can do that, or track actual expenses paid for the business, gas, insurance, repairs, maintenance, etc., and deduct that. But it's not an automatic write-off the way he's suggesting. The other thing is you can pay your kids, but they have to actually be doing something for the business. You don't just give them the money. And then if you're paying your kids the money, then you're supposed to have the kids get the money, not just put their names on the checks and then you take all the money back. So these are not ideal tax strategies in that there's a lot more hoops to jump through than he's implying. And if you're not doing it right, then it becomes sort of tax fraud, and that's problematic. So yes, there are definite ways to save money on taxes as a business owner, but these are aggressive, borderline shady tactics that he's promoting here, and he's leaving out a ton of information about who and where it applies. So I would say rather than getting some tax advice that you may or may not believe from TikTok, I would suggest talking to an actual tax person who can give you legitimate tax advice and help you find legitimate tax savings so you don't have to lose sleep at night worrying about whether or not you're going to get nailed in an audit.